Good afternoon, ladies and gentlemen, and a warm welcome to this 8th World Bank Africa Investor Strategic Dialogue on Building African Participation in Global Value Chains. This is an important dialogue that we host each year to extend the private sector from the continent as well as the public sector an opportunity to pick up some of the key issues that are likely to be taken forward throughout the year at the bank, as well as feeding through some of the conversations that will be taking place during the meetings, the spring meetings themselves. Today's dialogue will look at the role that African domestic industrial companies, private equity firms, the African private sector, as well as African governments can play in partnership with the private equity firm and the World Bank and policymakers in the private equity community to build regional value chains and brands capable of creating jobs and enhancing Africa's competitiveness and overall influence and position in today's global economy. I'd like to take this opportunity also to welcome our online audience. And if you're following on Twitter, please use #AfricaValueChain. There are 4 key areas and questions, but not only those questions that we're going to address today, that I'd like you to really follow us with and really participate and share your perspectives on. But the panelists are going to really lead the discussions on those specific aspects. The first is, how can African companies mobilize non-bank capital for growth-oriented investments? The second, is there a new partnership that needs to be driven by the private sector on value chains? And if so, what forms could that take? The third, what role specifically could the World Bank Group and its development partners better play in the process of building regional value chains in the continent? And the much talked about fourth and final question is, should emerging sovereign, pension and public sector strategic investment institutions lead this agenda in partnership with governments as growth catalyzers? And I'm sure you're not anticipating hearing all of these answers from me, so I'm joined by a very elite and distinguished group of panelists. To my right, we have our host and chair, Annabel Gonzalez, who is the Senior Director from the World Bank Group Trade and Competitiveness Practice. A round of applause, please. Let's get everyone warmed up. And to her right, we have the Secretary General, Mukisi Kitui, of the United Nations Conference on Trade and Development. Thank you very much. To his right, we have Mamadou Igor Diarra, who is the Minister of Economy and Finance from Mali. To the end of the panel, we have Christina Duarte, who is the Minister of Finance and Public Administration from Cape Verde. We have Matla Kasaija, the Minister of Finance, Planning and Economic Development from Uganda, who will be joining us later. We have Regis Imogo Tatagani, the Minister of Economy and Investment Promotion from Gabon, here with us now. Thank you. We have Solomon Asamoah, who is the Vice President for Infrastructure, Private Sector and Regional Integration at the African Development Bank. To my immediate left, I have Edward Matthias, who is the Managing Director of the Carlyle Group. And to his left, last but by no means least, we have Ashish Thakkar, who is the Founder and Managing Director of the Mara Group. So to get us started, I'm going to hand over immediately to Annabel Gonzalez to set the scene and really help us understand the bank's view on this emerging issue.
Thank you very much, Hubert, and good afternoon to all of you. On behalf of the World Bank Group, welcome to our home, and welcome to this panel. I'm very pleased to be joined here by Mr. Secretary General. Thank you very much for coming, for such a distinguished group of ministers, representatives from the private sector, and of course with such a diverse audience as we have here today. Now, connecting to the global economy can be a powerful driver of economic growth, job creation, and rising living standards. And one important way for countries to connect is via global value chains. Now, in today's economy, as the video was mentioning, business do not only trade products, but actually they work together to make things. Global value chains bring together the experience and knowledge of lead firms with suppliers of components along all stages of production in multiple companies and locations. They are actually a great learning experience, a mechanism for transferring know-how and technology that with the right conditions can help firms and countries catch up and upgrade. Now, we have seen the very powerful role of global value chains in contributing to poverty reduction in many parts of the world, most notably via manufacturing in East Asia. The reality, however, is that global value chains can support economies at different levels of development and in key sectors, in manufacturing, of course, but not only in manufacturing, in agriculture, and increasingly more in services. And Africa is and should be no exception. Up until now, Africa's participation in global value chains, though higher than in other parts of the world, is still relatively low. Binding constraints in the areas of infrastructure, energy, skills, or the business environment may have limited this participation. But this is changing, and it is changing as we speak. African countries from South Africa to Mauritius to Lesotho to Tunisia to Tanzania to some of the countries in our panel today are all participating in global value chains. They're also participating in regional value chains because, as we have come to learn, many of these supply chains, many of these international production networks are actually regional in nature. So more is yet to come. Exciting new investments, for example, in Ethiopia and in Kenya, may pave the way for a strong integration of Africa in global value chains. Now, having said this, participation and upgrading in global value chains is not automatic. Though the main drivers of participating and upgrading are country-specific and value chain-specific, there are some key factors relating to connectivity, skills, cost of doing business, and the nature of the business climate that are almost universally relevant. More sector-specific measures, of course, are also very important. We at the World Bank Group are looking at this very closely. We have put together an offering to work with our client countries to help them identify and remove the key binding constraints to global value chain entry and upgrade through a combination of advisory, lending, and investment support that would help trigger a virtuous cycle of reform, global value chain entry and upgrading, and development. In doing so, we are learning from our clients, and we are looking forward to learning from you today. We want to hear what are your views in some of the main constraints impacting your country or your industry for participating in global value chains. What role do you see for regional global value chains? In particular, what role for intra-African global value chains? How can public-private sector collaboration foster global value chain participation? How to maximize the benefits? I mean, there are many, many questions that we are very, very keen on learning, again, from our distinguished panelists, but also from you in the audience. So not to take more time from the relevant part of the discussion, let me stop here, Hubert, and I'm willing to, very, very interested in listening to all of you. Thank you.
Thank you, Annabelle. You've really set the tone, and I think that one of the key points that came out of this is that it's multi-layered and multifaceted. And it just takes me back to, how to transform not only institutions, but industries themselves. And it takes me back to the time when GATT was transforming into the WTO. And then we were told, you trade to invest, you invest to trade. So I think I'm going to call on the Secretary General of one of the leading trade organizations now, UNCTAD. So Mr. Secretary General, I'd like specifically for you to help us understand your vision and UNCTAD's vision in terms of building and integrating Africa into global value chains.
Well, thank you very much. I want to start off where you left off, which is the WTO. I think, first, Africa must have the political priority on global value chains as a make it or you are nowhere before we can look on how to achieve it. The political significance of belonging and climbing up the value chain is critically important. And I say I started the WTO end because the WTO in the multilateral rulemaking for trade has been stuck for a long time with the Doha Round, which has been left behind by a lot of what is happening today. It's not discussing how to climb the value chain. So by trying to have the political will to drive retiring, completing, harvesting the Doha Round at the MC10 in Nairobi later on this year, developing countries, particularly Africa, will have an opportunity to write their new priority agenda, and which should up there include global, getting a sizable momentum in moving up the global value chain. What have to be done as things? One, critical, regional integration. The process of regional integration is the best learning process of competence building, addressing communicational and competitiveness, trade facilitation hitches, making made in Africa worthwhile, knowing that time matters. It's a learning process that can be then translated into opportunities further afield. Number three that I'd like to mention, you cannot climb the global value chains in sophistication, particularly services, without investing in knowledge-intensive trade. Africa simply must teach its sons and daughters to be more competitive, to be competent, to offer higher value services to the global value chains. Number four, the notion of commodity economies as enclave economies, where you have extractives with a railway and other infrastructure going to the mine and heading to the port, where 90% of the domicile of the population is totally unintegrated to the main economic activity, reduces the potential for climbing the global value chain and even the politics of investment in the commodities. So what is looking at a partnership between the private sector and public sector, build infrastructure for inclusion, addressing digital divide, fiber optic networking, for example, low-cost energy and predictable energy supply, 21st century roads and railways and water services. On the basis of this, then you say, let the private sector and government leverage their competences to grow the potential of Africa as a player, but also climbing out of the basement of dependent on primary raw products that it has been dominated with. Thank you.
Thank you, Secretary General. If you could just expand just a little bit in terms of how would you sequence that? I mean, where do we start? I mean, what would the priorities be from the private sector standpoint? Because there's quite a menu there.
Right. For the private sector, we can do what the private sector is doing elsewhere in the world. That corporate social responsibility and social sensitivity should now drive to a more expanded private sector than an extractive private sector. And that means that you invest in growing the human resource that can do some of the services that you are outsourcing when they are possible to develop in Africa. The private sector must start having the long-term thinking by investing in growing the human resource that can offer the diversified services. Secondly, private sector can open up to possibilities of partnership with government in PPP arrangements for infrastructure investments, energy, electricity, fiber optic infrastructure, as critical partners. So it's not just an infrastructure, it's also an investment. And I think these are the starting points. But at the core of it, the political leadership of Africa must have a destination. I believe that they are capable of doing it and acknowledge that the private sector in their countries and the entrepreneurs should be the drivers of getting it.
Thank you, Mr. Secretary General. So it's fortunate then that we have some ministers on the panel to hopefully share their views with us, and in particular their vision for building the private sector in their own countries. So I'd like to put that same question to Minister Diarra from Mali. If you could please share with us, Minister, your vision for building the private sector in your country. I'd also like to apologize. I understand the translation is slightly compromised, and in other words, it's not working. So,
Only you.
Right. Okay.
Merci beaucoup, Monsieur le Secrétaire.
Thank you, Secretary General.
We have a big problem indeed. We switch from French to Portuguese, maybe under the influence of my neighbor. Anyway, I wanted to thank the organizers for organizing this panel, which is very timely, and considers the issue of valuing, of value in the value chains. In Mali, as is the case in most African countries, as was saying my Iranian colleague yesterday, we are confronted with something that's both quite simple and quite difficult. The result is, in the end, to find ways to create wealth in such a way as to give the populations of our countries a certain amount of autonomy with respect to food, with respect to basic products. The whole issue of the value chain, the whole concept of value chain is by definition something in many stages, from R&D to design to production and its organization, all the way down to distribution and marketing. Now, what we've done in Mali for the past several years, and in spite of the major military crisis we've had, and it's put paid to all of our previous efforts, what we've tried to do is organize the different industries where we happen to have a certain advantage, and beginning with agriculture and livestock. With the support of our partners, and especially the World Bank, we've put the emphasis on research and the development of processes likely to increase agricultural yield. We have therefore reinforced the capacities of the different players involved in agricultural production. This also includes investments so that we can develop all the arable land available. In Africa, the main problem is one of funding. We have to come up with clever ideas that can bring together traditional processes and new approaches. Often, as is the case in Ghana with cocoa production. Other examples include Tanzania. These are countries that have been able to set up funding systems that run the whole range of activities all the way to production, warehousing, and logistics, and so forth. I will be brief and say that we are in favor of development. We are in favor of experience, and we think that our partners have an even greater role to play, the World Bank, but also the African Development Bank. They can provide the institutional framework we need to fund and to maximize value chains.
If you can follow, please, just to come back to you and ask for your specific views on what policy options you feel you have at your disposal to address some of those issues that you've just mentioned. Okay. I don't know if you have a...
It's not moving. It's not working. You got to move on.
Yes. Okay.
Comme je l'ai dit, hein, je pensais que vous...
I thought you were done with me and that I was going to hand over the floor to someone else, but I don't remember what you were saying. Well, what we've done is, let me take an example in agriculture. What we've done is to organize farmers, especially in the area of cotton. Cotton is our second export in Mali. So we've organized farmers via associations so they can increase their individual capacity and to enable them to borrow. This has enabled Mali to increase its cotton production. We were at around 300 to 400,000 tons a year. Today, we're at about 500,000 tons of cotton production a year.
In a similar way, just to please outline your commitments and interest to build the private sector in your own country. Thank you.
Good afternoon. Thank you very much for this opportunity. I think you are discussing the private sector building on a domestic level in order for African countries to have a greater participation in the global value chain. Since you are in a lunchtime, I will allow to myself to be a little bit provocative. I think this global value chain story needs to be told in a different way. Global value chain. This global value chain, or most of them, starts in a specific place, in a specific country. Then they became global. So most of them, they are first African value chains. Cacao, for example. And then they became global. When we start for calling directly global value chain, from an African policymaker standpoint, what I feel, someone is trying to dilute the ownership of this value chain. I see in my pockets. Someone is putting the hands in my pockets. So I believe that it's time for African policymakers to address this issue in a quite open and straightforward way. And in my point of view, there are three ingredients that are important to get a bigger participation of African private sectors, let's say in this global value chain. You'll need leadership, you need vision, and you need ownership from African policymaker standpoint. And why you need these three ingredients? First, you need to adopt policymakers. We need to adopt quite appropriate public policies to address this issue, particularly when you are talking global value chains from a natural resources management standpoint. You have to tackle physical flows. You have to tackle financial flows. You have to tackle fiscal flows and budget flows. Second, I believe that we need leadership, vision, and ownership so we can put in place strong institutions capable to deal on an equal partner basis with multinationals. Third, we need to increase domestic knowledge in terms of international contracting. Some of the times, a footnote just jeopardizes everything. How many contracts have been jeopardized because our staff, has not read the footnote? It's just, and most of the times, an important bulk of the contract, which is amazing, is in the footnotes. So it's quite a reverse contract. So by saying that, I believe that we African policymakers, we have no alternative. If you want to promote structural transformation in Africa, we would better start implementing public policies to empower African private sector. And when I say there is no alternative, it's because who African policymakers, you have the voters, the parliament, running on us. We African policymakers need we need an empowered private sector for two reasons. First, to seize the opportunities. Without them, you'll be unable to do it. Second, to help manage the risks. In terms of helping managing the risks, we need the private sector in terms of economic diversification. Look what is happening with the global chain of oil, with such commodity downturn in terms of price. You'd better involve your African private sector in this global chain, in this and in the economy, to diversify and to prepare yourself for external risks. Second, we need to empower the African private sector so we start grabbing more and more financial resources. Because if in a global value chain, 20% are in Africa and 80% are outside Africa, what do you need? You need just to take this line and move it. It's easier. It's just to move a line. Take the line and move it. And move it. Let's reach 50%. Let's reach 60% of the value chain. And in order to do that, you need private sector, of course. But in terms of succeeding, mobilizing private sector, you need to do your homework. You have to put infrastructure. You have to put a regulatory framework. You have to build a competitive fiscal framework. You have to create you have to provide to supply the market with human capital, etc., etc. So I believe you need to start telling this story just a little bit before you usually start. Thank you very much.
Thank you, Minister Duarte. Minister Tatengani, is it just a case of moving the line a little bit? How do you see it in your country? If you could please just share your views on how you seek to engage the private sector, not only to develop domestically, but also take advantage of the sub-regional opportunities and then the broader regional opportunities.
Merci.
Thank you. Gabon exports oil out the sub-Saharan region, and our economy has long taken advantage of these natural resources. And as a producer of raw materials, we've experienced growth, which has nonetheless not led to homogeneous growth. So efforts have been made to stabilize the macroeconomic framework. Now we need a model that will lead to inclusive growth, fight vulnerability and instability, and have more diversified growth. And Gabon has a new strategy now. And we have a tool to implement this program, the strategic plan for emerging world. The model aims to transform the economy. We need to take advantage of all of our opportunities. All African countries have natural resources. And for a long time, all of these countries tried to develop these resources, and that didn't lead to better development. That means we have to rethink economic activity. We need to be able to move up the value chain. That's the issue for us today. We therefore have three avenues for growth and development. Green, Gabon, agriculture that would be sustainable, but also industry. How do you go from agricultural production to agri-food industry? Since industry is the second avenue, the second pillar, we have to base ourselves first on our mining resources. But let me specify, we are the second largest producer of manganese, the Arment Group. In the 50s, manganese was produced and there was no processing. Now we've said no. We want processing plants for manganese. This has led to the creation of a metallurgic complex which produces 65,000 tons of product made from local manganese. And that means 1,500 employees to produce manganese, but 420 more jobs for the processing plant and as many indirect jobs. Processing is obviously how African countries can move up the value chain. And that's the only way we can have access to more value added. As the Malian minister and as Mrs. Darache said, we need prerequisites. We need infrastructure, of course. We need power. We need trains that work. We need roads. We need a port. So once we've solved the infrastructure issue, once we've solved the human capital issue, in 2010 we decided no longer to export logs. There has to be some processing locally, at least the first level of processing. That means different skills. That means new human capital, because the wood processing industry requires certain specific skills. This is also something we need to reinforce. That's what Africa needs. After that, there's the business environment. If we want a bigger private sector, we have to be attractive. We need a clear legislative framework, a mining code that's clear. We need a stronger governance. Africa is competing with the other continents. We need a strategy to reinforce, to strengthen the business environment so as to attract more FDI. If you're trying to integrate global industry, it makes it easier because you know that if you focus on infrastructure, that'll be greater yield. It's also a way of doing away with the local constraints. We don't have enough trade among African countries. Africa's the continent of the future. We have a middle class whose income is increasing. It's a big potential market. Now Africa needs to take these opportunities, needs to seize them. We need to develop trade among ourselves. We need to have enough density so as to have the leverage we need to develop this infrastructure. We have decided to stop the operation of unprocessed raw materials. No one will be able to operate the raw materials in our country without processing, doing some processing locally. This is the best way to enable Africa to increase its position in trade and to get a bigger share of innovation and development. I see a necessary amount of destruction of previous structures to get to the kind of development we need.
Share your views in terms of how you see the ADB's private sector arm intermediating some of these policy as well as practical architecture-related issues. And we're going to ask you a very frank question in addition to that, to give us your perspective about whether and to what extent you see the continent's environment as friendly to business or business-friendly. Thank you.
Thank you. Thank you. I was told to use this.
Correct.
Can you hear me? Okay, good. Good, thank you for that. I think there's a couple of things that I would emphasize. First and foremost, if we're talking about building global value chains, and I assume we're talking about building it for the benefit of Africa and Africans, that's not possible unless you build a strong private sector in Africa, so that they can create more value and retain some value. So my approach to this is really to think about what we need to do to strengthen the private sector within the African context. And it's very important, as Hubert said, is that my portfolio covers infrastructure, private sector, and regional integration. And the reason why that complex was put together was because the linkages between those will help to develop a stronger private sector. So what are a few things that you need to do that? I think the first thing you need is you need both a solid commitment from the governments of the country of Africa towards creating the environment that the private sector can flourish, or at the very least compete. That starts with strong public policy statements, which we've heard from the panel this afternoon, which is great, but it's also backed up by strong practical action from the government, consistency of policy. There's nothing worse than policies that change every quarter, every year, or if a particular minister leaves, things can change. So consistency is very important. And then a belief in the private sector and the issues that are important to them. I always tell ministers when I speak with them is that listen very carefully to what the private sector wants, and don't give them what they want. Give them what they need. There's a very important difference. What they want is none of the risk and all of the profits. What they need is an acceptable amount of risk and an acceptable amount of profit. And that the amount of that is a process of negotiation. So I think we start from that premise. I think if we're going to build value in Africa, we have to address the number one item that everybody speaks about, which is the infrastructure deficits. It's impossible to compete with a manufacturing base or businesses in Africa with other parts of the world if you have no power, if your power is very expensive, if your power is unreliable, if your transportation systems don't work, if your goods get stuck in your ports for weeks, etc. My president, President Kaberuka, has this wonderful slide. He puts up 2 slides. The first slide is a pothole-filled road on the way to the border and a lorry trapped in the potholes. And then he says, this is the problem of infrastructure deficits. And then he builds up another slide, which is a fantastic highway, but then you have lorries backed up for about a mile. That's really to do with non-physical barriers, so the tariffs, the one-stop border post, those issues which are important to solve for regional integration projects. So I think a lot of thought has to also be in those particular areas as well. I think a sound macroeconomic environment is crucial for a private sector to develop. If your macroeconomic environment is very, very weak, if your inflation rates are very, very high, your currency is continually depreciating, for example, it's very difficult to build a sustainable local private sector. I think other things such as strong financing capacity and strong financial institutions and local currency, if possible, are also important for building the private sector. So I think these are some of the things that I think are important to develop. And then you must also have capacity within the local private sector. So you must encourage joint ventures, you must encourage training, you must encourage investing back into local entrepreneurs, you must invest in SMEs. My personal thing that I think is very important, you must invest in local project developers who can build and learn the capacity to take projects to bankability so they can raise the financing. All of these issues, I think are very important for Africa to play its rightful role, as mentioned by the ministers on this panel, in retaining and keeping a lot of the value at home in Africa.
Thank you, Solomon. You also, within your department, are responsible for capital markets. And we always hear whenever there's a private sector development-related issue or an infrastructure or a logistics-related platform development question, why don't we better engage, or how do we better engage the capital markets? Could you paint a little picture about if the ministers on this panel came to you and said, we have an idea and we really want to work with the African Development Bank to engage the capital markets to really build out and strengthen the value chains on a Pan-African basis, what would your thinking be in terms of practicalities of achieving that?
I think it's extremely important for two main reasons. The first main reason is that if you can rely upon stable local financing or sources of financing, then your businesses are going to be stronger. But that only works, as I said, in a stable macroeconomic environment. The other reason why it's important is that there's huge amounts of untapped capital at home, sitting in our pension funds, sitting in our insurance companies, even sitting in our central bank sometimes, which can be unlocked for use of investing and financing local infrastructure and local private sector. And that means that you become less dependent upon foreign sources of capital, which is great as a complement. But if all you're relying upon is foreign sources of capital, then when the mood and the sentiment changes, your private sector is going to be very vulnerable. So I would say it's very important to develop the capital markets so we have local sources of financing which aren't going to go anywhere. I mean, they are locally sourced. The best example I can use of that is the Nigerian financial sector. And the growth in the Nigerian financial sector over the last decade, which means that you have really strong, powerful banks now in Nigeria that can finance infrastructure and large projects. The whole power sector in Nigeria was recently privatized. Foreign financial institutions didn't come to the party. It was the local banks that financed it, and deep capital markets. I think it's very important. We saw that from South Africa with their strong financial sector, and we'll see that in Nigeria, and we'll see it in other countries, Kenya as well. I think that's extremely important so that we're less dependent upon other people's money.
Thank you, Solomon. But obviously, in partnership with the international private sector, and this leads me nicely to Ed, who is the managing director of Carlyle, one of the largest private equity platforms globally. But I should caution you, I think you should be asking in terms of need, not want, or else Solomon might interject there. But if you could please just share with us your views. I mean, you invest in FMCG players and all sorts of different agriculture and logistic players around the world. What's your view on how the international private sector can collaborate with the local domestic private sector and the financing institutions and the governments to increase Africa's participation?
I am the private. Let's see, can we turn this? We need this. Yes, I am the private investor hoping to get what they want. Let me just make two comments first. With the caveat, I'm not a government employee. I was appointed to the Presidential Commission on Doing Business in Africa. And that creating a value chain is one of the top priorities. And you can say, well, what's going to happen from that? But these are the companies, Coke, Walmart, Caterpillar, that really have a need for this in Africa and understand how to go about it. And I think that will eventually have a very good effect. One of the things that the Commission is thinking about and pushing on is risk mitigation to get some of these things done, to use some of the sovereign wealth funds and use some of the governments to take a little bit of risk out of the project. So that's one. Secondly, I've been involved with Power Africa. And there again, that's at the bottom of the chain, but it's an essential element. And here again, the U.S. government has been trying to do things to foster that. And you're probably, a lot of you are aware of the presidential summit. They did something like $30 billion of joint venture arrangements for power in conjunction with that. So on the ground, these things are happening. From our perspective, then, we have approximately $750 million and a fair amount of money to accompany that to invest in Africa. We need the infrastructure. We can't solve those problems ourselves, but they will facilitate our companies doing well there. The problems we run into are partially supply chain, but partially governmental. I mean, it takes, and partially it's a result of some of the U.S. policies, but it takes us about twice as long to close a deal as it does someone from Europe because of the requirements we have to meet, et cetera. If I could point myself to one area that is in need of sort of working on the chain, it's in the financial area. Because strong countries need strong markets. And that applies to the banks, and that applies to the financial markets, both debt and stock. And today, there aren't a lot of linkages across Africa. So, I mean, we're not going to operate in 54 countries, but we're not going to operate in one. And we need ways to kind of cross those borders. So it's a challenge for us, for foreign or international capital coming in to buy companies. There's a limited number of large companies that we could be active with. We see a very vibrant market in the middle-class family companies, middle market, family-owned companies that need capital, and an embryonic sort of venture community that's starting to develop in Africa. So we see tremendous opportunities. We're like a lot of companies. We want to get an initial foothold, but it is not easy.
Thank you. Ashish, we sort of spoke at the beginning that we're going to be talking about the role that industrial companies can play and the role that banks can play. Apparently, it just so happens that you have both of those characteristics wrapped up into your group. So if you could just sort of share your views. Specifically, is there a new partnership that needs to be driven? Because we speak a lot at these types of events, and there's the public sector perspective, there's the private sector perspective, but what this particular dialogue is seeking to achieve is what is that middle ground where the public and the private sector can really move forward in sync to put the policies and back the companies that follow those policies in place. I'd just like to hear your views. Thank you.
Thank you very much, and thank you for organizing this. With Mara's experience for the last 2 decades almost, across 22 different countries in Africa, I'm going to be touching on a few practical perspectives that we've been through. I think the Secretary General touched on this earlier, but regional integration is crucial, and we're seeing it improving. The East African community is probably the latest regional integration trading bloc, and it's probably been the most progressive. Now, that could be for several reasons. I think probably because it's a smaller market. Uganda, Kenya, Tanzania, Rwanda, Burundi. But it's been super progressive where we've seen an impact directly in the private sector space. But the regional integration is a very important element purely because it gives the economies of scale required to do other things. I think the second element is we do have a logistics challenge. We do have an infrastructure challenge. While we dwell on that and while we find solutions for it, I think there's a huge opportunity in the manufacturing space in this, due to this. And that's partly because you can actually create and manufacture low value but high volume products. A simple example is packaging. In the East African community, packaging was being imported, believe it or not, from Italy and Brazil. This is corrugated packaging, boxes. And we need boxes for the last finishing step of a manufacturing process. We need it for our exports, be it horticulture, agriculture, etc. And it was being imported from Europe and Latin America. We put up a manufacturing plant for packaging maybe 10, 12 years ago, and today we're the largest packaging plant in East and Central Africa. there are no imports coming in now from the region because of this manufacturing plant. We can compete on a global level due to the fact that it is high volume and low value. So there's a huge opportunity when it comes to this. I think some of the ministers touched on this, that the value-added process actually comes in that manner. The third element is backward integration. Backward integration is another very important point, where a lot of our manufacturers start off in a way where they're actually importing a lot of our raw material. Another case in point within MARA is glass manufacturing. Now, float glass, which is windows, the only places in sub-Saharan Africa that manufacture float glass, which are windows, not bottles, but windows, are South Africa. We import all of our glass. Yet we have the sand, we have the silicate, we have the gas. So we're putting up a $210 million plant in Nigeria, which will be the first glass manufacturing plant in the region. Again, it's that taking advantage of natural resources that exist on our continent. Fourth element, which the Secretary General again touched on, is the skills angle on how we can actually build the talent to create a lot of these requirements that are needed on the ground. I think an important point is we need to shift our mindset and the vocabulary from the offshoring to onshoring. How do we actually provide services on the ground in our countries? Another case in point within our group is call centers. We today we're the single largest independent call center operator on the continent with physical presence in 11 countries in the call center space, serving telecom companies, etc. Now, these jobs used to be outsourced. They used to be offshored. Now they're onshore. We serve locally. And now we have the ability to compete globally with the Philippines, with India, etc. So that's another very important element that comes into this. And I think lastly, on the partnership model, I think it really comes down to, Herbert, is how do you create the best of global and the best of local, right? We don't have to reinvent the wheel on the ground, on the continent. We can actually find partners who are doing this on a global level and bring them into the continent by making them partner with local organizations. Another case in point is Atlas Mara, when Bob Diamond and I partnered and we created the banking group 16 months ago. We today own banks in 7 countries across the continent. And the whole idea is the fact that our banking sector today on the continent, we only have 11% banking penetration on the continent, yet we have 80% mobile phone penetration. We created mobile money as a continent, yet it's telecom operator-led. It needs to become financial institution-led, and it needs to become mobile banking from mobile money. These kind of innovative solutions, homegrown, but combined with the best of global, is our answer.
Thank you, Ashish. Where can we buy stock?
ATMA London.
ATMA, right. But I want to stay with you for just a moment on that, because one thing to have a success story, but and we've heard Ed talk about the need to scale. He needs access to more opportunities, and then we've heard Solomon talk about the need to support the local private sector in the form of developers. We need more developers, and we need to give developers more support. What would your advice be to the World Bank, who's keen on really creating a more hospitable environment for long-term investment and growing the African private sector?
It's a really good question. I think, it comes down to public policies is one big angle, right? Where I think a lot of work needs to be done from the World Bank, from its development partners, but also governments. One example is that I'm on the Global Agenda Council for Africa for the World Economic Forum. President Donald Kaberuka of the Africa Development Bank, Dr. Carlos Lopez of UNECA, and a few others, we all sit on this, and we've been working on something which is how do you bring the informal sector into the formal sector? I think sometimes the World Bank, development institutions, our governments get too carried away at looking at, very complex solutions and very high-end stuff, whereas actually, when you think about the startup community, when you think about young entrepreneurs on the continent that really do need basic support, we need to create this framework for them in order for it to work. A simple example is, unemployment is a big issue. In Africa, we have a youth unemployment issue due to our young demographic on the continent. 4 out of 5 SMEs in South Africa, right, 4 out of 5 SMEs in South Africa fail. If we fix the failure rate for these entrepreneurs, that will solve this issue. And the way to solve that, I think, is public policy that encourages these young entrepreneurs, these startups, to actually become a part of the formal sector from the informal sector. It comes in things like informal education, such as mentorship. And thirdly, bringing in access to capital in the true sense. And we talked about capital markets earlier. We need to follow not the European model where 80% of the debt sits on banks' books, But it's actually, we need to follow the US model, which kind of creates securitization and develops the capital markets. We need to think about how to bring in venture capital funds in the true sense that actually creates the venture startups. The Mara Venture Investments, which Patience is here and running, is one example, and there are many types of this nature. We need to plug into these kind of solutions which are homegrown.
Thank you, Ashish. Very specific, very clear. And thank you, panelists, for all of your insights and inputs. But I'd like to just take the last 5 to 7 minutes to open the floor up for questions. If you could identify yourself and whomever you're directing your question to, please. There are microphones on the floor. 2 questions. Thank you. No, it's working now. Okay. Do I presume they've answered every single question you were thinking? All right. Okay, great. First question there for Shabir, I understand. Okay, fine. Take 2 questions and Annabelle. Okay. By the way, I know there are more hands than we have time for questions, but most of the panelists will be here for the next 15, 20 minutes, so do feel free to just approach them afterwards.
I'm very encouraged by Mr. Thakra's approach. I think is very much an African, understanding the African context and the context in which we need to work. My concern is that when you look at building African participation, a World Bank group, investor dialogue, my concern, and I want to be honest, that we in Africa have very little faith in World Bank success rates. And we wonder whether the approach that the World Bank is trying to do, what I say using 20th century technology, 20th century processes to deal with 21st century problems, wonder how you're going to be able to work with countries like Kenya to develop a framework. And you know, at this moment in time, Africa is we have options from China and the BRIC World Bank option. The World Bank options, we work on what is called a now solution. And whereas the World Bank has been looking at a longer-term solution. Sometimes they call it holistic. But we in Africa want to know what we can do now. Thank you.
Thank you very much. And we have another question over there.
Thank you. I'm a member for UNESCO Task Force. And this coming May, we will organize in Florence an event to launch a global initiative after a few years of experience, how to create jobs in what we call cultural and creative industries. So I will bring there probably the most advanced, well-prepared, the Japanese who documented their handicraft, their what is called intangible cultural heritage in 800 rural areas. As you may know, Japan also is an importer in a scheme called One Village, One Product. So our assumption is this industry, cultural and creative industries, is ready to take off all over the world. We think Africa can have in value chain, in relative terms, higher contribution than in other sectors. So we have from movie making to handicraft to documented local cultural heritage, and the framework is ready, methodological framework, experiential framework is ready. Would the World Bank consider a sort of test of these ideas, because it's the largest source of jobs today. They are anchored locally. We are invited also in China for what they call Silk Road this coming September, and they identified, we work together, those cultural and creative industries jobs. So the infrastructure is obviously different. In particular, when we talk about education. But to document your backyard, cultural heritage and natural heritage, or cultural capital and natural capital, I think Africa would benefit, and value chain can be located mostly in Africa. Thank you.
Thank you very much. I'm going to read a question now from someone called Mr. Competitiveness. Sounds like he should be on this panel, actually. This is one of our online followers for this particular debate, as we are being streamed live. And the question is, what can African firms do to increase the quality of production and reduce delivery times? Last question, and then I'm going to hand over to Annabelle, our host, to give some responses to the questions and then make some final remarks.
Thank you. My question is to the panel. How do we attract the high added value segment of the value chain? I mean, it's the experience of China obviously show us how you can attract the low added value, but clearly Africa cannot compete with China unless probably not in the near future anyway, because maybe later on when the wages, the labor wages will rise up enough in China to become less competitive, then it may become competitive, but at least in the foreseeable near future, is not the case. So Africa has to develop its own strategy and its own model of growth, and not necessarily like the case of China. And that means having to focus on the high added value. But clearly, no one is going to give you their know-how. No one is going to give you the high added value. They're only going to relocate the low added value component of the business. And the experience from Southeast Asia, the ASEAN, is not very encouraging. Yes, there is regional integration. Yes, you see a lot of exchange between these countries, mostly led by Chinese industries. But still, if you look at GDPs per capita in this country, it hasn't grown much. There's a lot. You see the same commodity going 50 times across the border between these countries with little added value at each time, and the whole value is still staying with the owner factory, whether in China or elsewhere. So really, my question to the panel is how to convince investors, international investors, in actually coming and implanting the high added value and using the capacity of the African youth, particularly the unemployed, those that are employed with high education. Thank you.
Thank you very much. There was an additional question that we've received online, which is what can be done to include the informal sector in African value chains? But please join me in thanking the panelists for their great insights, and thank you for being such a good audience. And as I mentioned, I'm going to give Annabelle the task and opportunity to just address some of those questions and then give a final parting word about the World Bank's perspective on taking this agenda forward. Thank you.
Thank you, Hubert, for an impossible task, particularly within the couple of minutes that we have left. I think that probably I will not be able to answer all of the questions, but let me just make a few final remarks. First is that I think from the different participations that we heard today, it's we all seem to understand the importance of integrating into global and regional markets as a source for growth, for employment generation, for development. So this is a very important point. Second is, of course, we may agree on this vision, but how to implement it is a much complex question. And we have heard here many good messages on, first and foremost, the importance of the political will. Without a political will, there's no possible way forward. Second, basic conditions, macroeconomic environment, the business environment, the institutions, the infrastructure, the skills, the access to capital. All of these are very important elements. The role of the private sector. All participants were keen in indicating how relevant it is to foster domestic private sector and to attract foreign investment to further participation in global value chains. One very important element mentioned again by several of the panelists, how can we have more value being generated in Africa and staying in Africa? This is a very important aspect that links to some of the other issues that were discussed, including, for example, skills, how to increase skills, how to increase competitiveness, because this will help upgrading the value chain and, again, more value to stay in the region. Role of regional integration, absolutely crucial if we are to develop further intra-African global regional value chains. Regional integration is key also for connecting to the rest of the world. And finally, the role of international organizations, including the World Bank, but certainly others. I think that the very important role is basically to support homegrown models of development. This is very relevant. We can help members, we can help countries learn from each other, learn from different experiences. We can also bring best practices together. We can also bring a combination of instruments, including the advisory wealth, the convening power, the lending, the access to finance. All of these are very important elements. But then again, it goes back to what the leaders in the countries are ready to do. Because again, it is in a way a responsibility of each country with the role, working very closely with the private sector and the civil society to chart a path for their own people. So in our case, we're here to support. So thank you very much.
Thank you. Session closed.